Hi guys, CJ here. Just thought I'd make a quick video to show you how simple trading can actually be if you know what you're doing. I like my charts very clean. I don't use any indicators. I really just monitor price action, key levels, market structure. So I'm going to show you on AUDJPY. First thing that I would do is I would mark out any key levels, and you can see that here in this region we have the 77 key level. You can clearly see that we failed to break it on multiple occasions. We tried once, twice, 3 times, 4 times. Now on the 5th attempt you can see that we broke to the upside and we created a new high in the market. So we were consolidating here for a period of time and then we pushed to the upside. Now another confluence you could add is a dynamic trend line, and you can clearly see that we are moving in an upwards direction. Now we want to get the highest probability setup, so there would be no point entering the trade in this position here because I'd be expecting another pullback, and the most high probable area to enter the trade would be back down at the 77 key level, and it would be a second tap on our ascending trend line. Stops we would want to be quite tight, maybe an 18 pip, not even maybe that, maybe you could get away with let's go 16 pip stop to protect ourselves, and we might target the 78 key level. You can see that's a 1 to 6 risk to reward. Now why would we have the stops below? As you can see, 77 is such a key level. If we broke back below the 77 key level, the move would be invalid. It would have been a fake out, and you would expect price to fall and trickle to the downside. We're also protected by the 50 EMA, which is wrapping around underneath price. So if we just play out price again, this is where we'd have our buy order. Let's just see what would happen. Can see we have a huge push to the downside, nearly would have knocked us out of our stops, but you can see that although we whipped down below the trend line and the 77 level, we actually had a body close above it, so we'd still be in the trade and our trade would have been executed. So let's see how this plays out. Again, hope you can see that every time price has hit the 77 level or this trend line, this ascending trend line, it has had a rejection, which again shows me that we are clearly going to continue to move to the upside. And then as you can clearly see, we did have that push to the upside, and we've now created a new high in the market. When that happens, we roll our stops to break even, risk-free trade. We could take some money off the table. As you can see, we could have already banked 76 pips, might have taken 50% off the table at around the previous high, around 47, 48 pips. So I hope that makes sense. Quite a simple video, but you can clearly see with just an ascending trend line and marking out a key level of resistance, it's been broken. That's how simple trading can be. Just you need to look for those high probable areas to take your setups. Hope that helps. Any questions, let me know.